Welcome to this meeting of the West Haymarket Joint Public Agency. I'd like to call the meeting of January 15th, 2020, our first meeting of the new year and the new decade, to order. To my left is Councilwoman Tammy Ward, and to my right is Regent Tim Clare. And we welcome you here today. This is a public meeting subject to the provisions of the Open Meeting Act, which is posted in the back of the chambers. And to proceed, our clerk, Casey, will read each item on the agenda, and staff will then come forward and make a presentation. Public comment will be taken on each item as needed, and if each speaker could please state his or her name and address for the record, and recognize that testimony is limited to 5 minutes per speaker, per item. With that, I would ask Casey to please call the first item.
Item number 3, approval of the minutes from the JPA meeting held November 25th, 2019.
So move.
Second.
All right, moved by Councilman Ward, seconded by Regent Clare. And without further discussion of the minutes, I would ask that you call the roll.
Ward,
Yes.
Clare,
Yes.
Gaylor Baird.
Yes.
Motion carried, 3-0. Next item, item number 4, approval of October and November 2019 payment registers and review of the October and November 2019 expenditure reports.
Members of the board,
Welcome back. I know we're looking at 2 months because we wanted to save that opportunity for you to make a presentation. So thanks for being here.
Thank you. I'm going to go over some of the highlights for October and November payment registers. So for October 2019, we had total operating expenditures of $1,777,789.92. Some high-level items on there was $54,072 that the board approved for servers replacements over at the arena. We have all of our annual insurance type payments that are coming through for general liability, public official bonds, property insurance of $176,000. The public official bonds, $33,150, and general liability, $25,743. We have maintenance costs over at the arena of $83,510, and that's for various types of annual maintenance contracts, and various food and beverage type equipment items. We have a $800,195 payment to SMG. So that was to pay off the pre-opening loan. And that's something that we've discussed before, that on the pre-opening there's a $2 million loan taken from SMG. So this paid that off, I believe, 4 years early. So we ended up saving somewhere around $3,600 in interest by paying that off.
So that
early.
was startup costs in effect to get going?
Yes.
And we were on a schedule to get that paid off, and we paid it off 4 years early?
Yes, that is correct.
Gotcha.
Yep.
Sorry, could you repeat the savings as a result of that?
It's about $3,600 in interest. So the interest rate on that loan was like 0.2% or something like that. So, but it's good to pay off debt early. So, with the parking management, we actually had 2 months worth of payments on the register. So those total up to $286,524 altogether. We also had a payment to the DEC, which we have on a monthly basis, of $208,833. Of that, 31% stays with the JPA, which is about $65,000, and then we bill about 69% of that back out to the customer. So we're going to receive revenue of about $144,000 out of that 208. So those were kind of the highlights for the October payments. Very minimal payments from the capital register. There was a total of $161,973. The main payment out of that was $160,000, which was a transfer to the city, which the board approved, and that was for the completion of the installation of the rail canopy. So that transfer has been completed. In addition, you have some financial reports available, and
The reimbursement though, right?
that was a reimbursement because the city
Paid it.
paid.
and then that was our obligation, and we
Yes.
paid it back.
Yes. You have some revenue, expenditure, and fund balance reports for West Haymarket as of October 31st. First month of the fiscal, second month of the fiscal year, sorry. So revenues of $5 million in total, expenditures of $2.4 million for a surplus of $2.4 million. That brought our ending balance at the end of October to $47.1 million. And then you also have income statement from SMG included in the packet for Pinnacle Bank Arena for October 31st. And they had revenues of $954,000, expenditures of $855,000 for a surplus of $99,000, and an ending balance of $982,000. So they've been able to carry over kind of a fund balance from the prior year as well. And if there's not any questions on the October, I'll move into the November. Okay. For November, you can see there's quite a bit of an increase. So total operating expenditures of $10,498,260. And a large chunk of that is $9,880,000. And that's all related to the bond refunding that the board approved at the October meeting. And that refunding was completed as of mid-November is when we went to market to sell those bonds.
But the net savings on that, you'll talk about this later, I assume, the net savings in spite of these costs far outweighed the cost of this.
Yeah, so and I think when we went over this in October, there were some fairly substantial reasons why to refund because of the market and the interest rates that we could lower. So when we met, we talked about refunding the 2011 and the 2013 bonds. And from the time we met and the board approved to the time we could actually sell the bonds, the market moved a little bit against us. But it moved enough that it made it not worthwhile refunding the 2013 series currently. But we're going to still look at that moving forward because there's potential savings there. But on the 2011 bonds, we ended up saving over 12%. So that's about $12.15 million net present value. So that's a discounted value over the term of the bonds through 2042. So we'll end up saving somewhere, I believe, around $850,000 annually on lowering those interest payments for that outstanding bond. That dropped the blended rate. So when the bonds initially start, the initial projections on the rates from a blended perspective was around 5%. When those all were sold, that came in at 3.8%. And then with this refunding, we were able to drop it to about 3.4%. So we're gonna keep looking at how we can save money moving forward by potentially also refunding that 2013 bond. So that's the big portion of the payments for the November 2019, and that 1.254 million, that was the escrow or the good faith deposit that we received. So we pay that back out to the escrow agent, and then our cash contribution was $8,550,812. And then there's some smaller payments below, $70,500. These are all cost of issuance payments for issuing the bonds. And we're going to have a few more of those come in over the next month. So I'll alert those to you as we move forward. From there, there's just quickly cover some of the other highlights on there. We had payment for demolition of Block 5. So that was to Jacobson Demolition. There's 2 lines there. They total $97,600. So that was kind of the final payment for the demolition of Block 5. We have $83,510 for maintenance costs at the arena. That's various types of maintenance that occurs at the arena for catering, food and beverage equipment, and annual and ongoing payments. The glycol flush for the cooling system that the board approved was paid out $41,552. We had 1 month of parking management, $148,098. Payment to the DEC, $205,261. Same thing. JPA is ultimately responsible for about $64,000 of that, and then we'll receive about $141,000 from the customers within that footprint. In addition, we had the $114,568 for arena maintenance and repair. So all of those expenditures that I just mentioned are included within the reports that you received. In addition, the statement of revenues, expenditures fund balance for as of November 30th for West Haymarket, we had revenues at $8.9 million, expenditures of $11.8 million for a $2.9 million deficit through November 30th, ending balance of $41.7 million at the end of November. Pinnacle Bank Arena, also you have a financial statement there. Ending November 30th, they had revenues of $1.3 million, expenditures of about approximately $1.3 million. So they had a small surplus of $23,000. That brought their ending balance for the year as of November to $905,000. Through November 30th, occupation taxes were up 3.6%. Remember, our benchmark is 2%, so we're continuing to go ahead of that benchmark. Compared to the original projections, we're 27% over where we thought we would be originally on occupation taxes, which that corresponds with the year 2032. So we continue to see good success there in the occupation taxes. With that, I'll stand for any questions on both the reports.
Questions? Any questions? Thank you. If there are any questions, thank you.
Thank you.
Would anyone else like to speak to this item? Please come forward.
Jane Kinsey with Watchdogs. So let's get back to the 800,000 on the payment register. So are you saying that you've paid off all of that original loan?
Yeah, so there was an original loan of 200 and some thousand, or sorry, $2 million from SMG to help with all the startup cost of opening the arena. So that 800,000 paid off all of our obligation to SMG.
So
Where does the startup cost loan go?
For the startup costs, yes.
So you owe nothing on that loan?
No, it's completely
Paid off. Okay. Where are the other payments? That's 800,000, and I think it had a 2 million, didn't it? What was the balance? Was the balance 800,000?
Yeah, the balance was 800,000, and then we had $195 for interest payments that were prorated back. So, but
Okay.
that's been fully paid. We've been paying around 200,000 a year on that loan.
Okay. So you did that in Fester?
That payment was made in October of 2019.
Yeah.
Yeah.
But the balance you gave me showed more than that. When you gave me that list of the payment. So what you're saying here is there's no money left at all that's owed, correct?
We still have overall debt payments for the bonds that were outstanding, that were originally issued, but for this pre-opening loan with SMG, that's fully paid off.
Paid off,
Yeah.
okay. And then risk management, that's for the environmental, 176?
Those payments to risk management are for insurance.
For
So,
environmental?
Yeah, that's for like general property liability insurance.
Okay,
Yeah,
not for environmental.
that would be included, I think, within that payment.
It is?
Yeah.
Okay. And what about the payment that'll be coming up in December?
Are you talking about principal payments?
Right, the bond
Yeah.
repayment, the big balloon one.
Well,
And that's coming out of what fund?
it comes out of our operating account to pay back
Okay.
the debt.
Any particular one?
No, it's just coming out of our operating account for the West Haymarket JPA.
Okay. Any of those particular line items it'll be coming out of, or just general?
I mean, well, it's gonna come out of the fund where we have all the resources available to make the payments on the debt. So if there's, are you talking like there's a specific line item? Like, yeah, there's a
Right.
debt principal object code that we charge that payment to. It'll show up within this register, and then we send that payment to the trustee to pay the investors off.
But right now, you don't have a particular area.
1 minute.
That's gonna, I guess, that payment's gonna show up in the January, or in the December register that'll come forward to the next meeting.
Right. I guess what I'm getting at is, where is that money at this time?
Well, like I noted in my report, we've got a substantial amount of surplus, so we ended November of 2019 at an ending balance of 41.7 million.
Okay.
So, we're continue to collect revenues, and then those balances are there to help support.
Support.
Yeah.
Okay. And the first payment is, do you know that off the top of your head?
The first principal payment, the bigger principal payments will occur within the upcoming fiscal year, so 2021.
Do you know exactly what it is?
I can tell you that.
Off
I
the
can
head.
send you.
5 minutes.
Okay.
Yeah.
Okay.
Thank you. All right, would anyone else like to speak to this item? Okay. Would you like to ask more questions? Yeah.
Just clarification, the 41 million is 27% ahead of where we thought it was going to be when we put the initial budget together. You said the occupation tax grew at 3.6% for the month. We budgeted for 2%, so that's a positive thing. And so the fact that we are where we thought we would be in 2032 shows that we've got enough money to make that payment in that first big principal payment and subsequent principal payments as well.
Yes, and the way that they designed this was, there weren't going to be principal payments on the front, and that was to allow the occupation taxes to grow.
Right.
So, yeah, we're coming to a point where these occupation taxes are growing and our principal payments are going to increase, and we're hoping we're going to match at that point so that moving forward, we're going to have enough resources to pay the bonds and all the operating expenses that are, within the JPA footprint. So,
Good, thank you.
Any further questions? Okay. Could I get a motion to approve the payment registers? And these are for October and November of
So moved.
2019.
Second.
Okay, moved by Regent Clare, second by Councilwoman Ward. Without further discussion, please call the roll.
Ward,
Yes.
Claire,
Yes.
Gaylor Baird.
Yes.
Item number 5, WH 20-1, resolution to approve an addendum to the Construction Management Services Consultant Agreement between the West Haymarket JPA and PC Sports for an extension of project management services for a final term of January 1, 2020 through December 31st, 2020.
Chris Connolly, City Law.
Adam Hobel-Heinrich, Project Control, PC Sports.
I'll let Adam do most of the talking here. The only thing I'll put in is that this agreement is the last extension of the original agreement that was done back in 2017. And so by the end of this year, the board will need to decide what it wants to do going forward, whether or not it wants to do an RFP to look for another contractor doing the same work, or it's possible to just go ahead and hire them directly, or not proceed at all. I mean, that's the decision the board's going to have to make, but you'll have that opportunity later this year.
This agreement is for continuing our agreement with the JPA, and I, on behalf of PC Sports, really appreciate the opportunity to continue to work with the West Haymarket JPA. It is an hourly not-to-exceed agreement, and the not-to-exceed number is based on an estimate of the time we think we'll spend doing the various tasks for the West Haymarket JPA of managing some of the small projects we have going. There's the streetscape in front of Oscar. We're forecasting some streetscape along Canopy Street for the future project on Block 4. General maintenance of some of the various facilities that aren't covered under like the DLA agreement and things like that, so property observation and maintenance. So one of the type of things that's coming up is item number 6. So just really appreciate the opportunity, and I'll take any questions you guys have.
Questions?
No, I appreciate the work that you've done from the start. You've been very transparent to the community. You've been responsive to questions that we've had. You've been proactive on issues, and so I appreciate the work that you and your team have done.
Thank you.
Thank you. Would anyone from the audience like to come up and testify on this item? We'll take public comment at this time.
Jane Kinsey with Watchdogs. Was this contract bid out?
Do you want
This
to
is
come
an
up, Chris?
extension of a current contract.
And was it bid out? Did you have other people bidding for this?
When the original contract was entered into, I believe that they were hired as a result of their work on the arena project. And so the kind of work they were doing shifted from the arena work, where the original process there, I think, was a competitive process. And they were asked to serve in this role as more of a project manager for some of these other projects at that point. But it was done pursuant to state statute, the County Purchasing Act, which is what the JPA follows.
Okay. The state statute 73-101.01 says that the lowest responsible bidder should have preference over, or a state over a non-resident bidder. And PC Sports is an out-of-state company headquartered in San Antonio. So we're concerned that there was not another bidder, that you're rolling this over, and that in-state companies should have an opportunity to bid on this contract you're giving them for a year.
These are professional services, so that statute that you just read from is not applicable here.
What?
That statute that you just read from is not applicable in this circumstance because it's professional services.
Well, professional services, according to the statute, are also limited. And how do they qualify for that?
They qualified as a professional service, and under the County Purchasing Act, which is how they were hired, under that set of laws, which is what the JPA is required to act under, they were entitled to make that hire. And that, again, that was years ago.
Yeah. Well, the city has defined professional services very loosely, and the state defines it pretty generally. So we're not feeling real comfortable that the city is following the state guidelines about defining professional services.
There's no question there, so I'm not going to respond to anything.
What did you say?
I just said there was no question there, so I'm not going to respond to anything.
Okay. Well, we will look at making some question to the state about it.
Thank you. Would anyone else like to testify on this item?
Chris, can I ask you a question?
Yeah.
This was an extension on an existing contract that was
Correct.
in place with PC Sports. So the terms of the extension are what? I mean, in other words, what did the original, I don't remember what the original contract said with respect to the ability to do an extension to that. Do we have to go through a bidding process? Does it?
After this one, yes. The original contract called for 3 extensions.
Okay, so
And
this
so-
is just, we're just following the original contract that was put through the proper bidding process to begin with.
Correct.
Subsequent extensions off of this, we're gonna have to go through a bidding process.
When you say bidding,
Was
a competitive process,
competitive
correct.
process, got it.
Yes.
Okay. Okay,
Any other questions? Thank you.
thanks.
All right, one last call, if anyone would like to testify on this item. Seeing none, can I get a motion to approve WH 21? Second. Okay, moved by Regent Claire, second by Councilwoman Ward. Please call the roll.
Ward,
Yes.
Claire,
Yes,
Counselor Baird,
Yes.
motion carried, 3-0. Item number 6, WH 20-2, resolution to approve a unit price contract with Commonwealth Electric Company for an amount not to exceed $2,901.20 to convert 21 exterior lights to LED at the Pinnacle Bank Arena to be paid out of the endowment fund.
Casey, could you move your microphone a little closer to you, too? Thank you. All right.
Good afternoon again, and thank you. WH 20-2 is in response to several pedestrian plaza lights in the arena that are the old, probably, I think, metal halide lights that have started to go out. There's about a quarter of them that are out right now. Based on assessment of that, as well as the forecasts of the rest of them going out shortly, we have looked at switching all those lights out to LED, and that's what this agreement is for. We use county purchasing laws to find a unit price contractor, and Commonwealth was the low respondent for us, and we recommend approval of this. And what it will do is the pedestrian plaza lights around the arena will now become LED and fix the quarter of them that are out already.
Any questions?
this is paid for out of the endowment fund that we set up?
Yes, a few years back, there was an endowment started for maintenance above and beyond typical day-to-day maintenance for the West Haymarket JPA area. That will help fund this.
All right, thank you. We'll take public comment on this item.
Jane Kinsey with Watchdogs. So did you have bidding on this, or did the city purchasing give you this after bidding, or how did that work?
This is done through county purchasing, but they have what are called unit price contractors. And we use that list to procure quotes as they are requested, or bids, and award to the lowest respondent, yes.
So-
because they are contractors.
So you went through them?
Yes.
Okay. And then, are they a subcontractor for you, or are you just overseeing it?
We are the management, the agreement is with the JPA.
Okay, so after purchasing lets the contract, then you take it over, is that it?
We make sure that they perform the work according to what they
That
bid.
it's done?
Yep.
Okay, thank you.
Would anyone else like to speak to this item? Seeing none, I'd entertain a motion on WH 20-2.
So moved.
Second.
Moved by Councilwoman Ward, second by Regent Clare. Any further discussion? Please call the roll.
Ward,
Yes.
Claire,
Yes.
Gaylor Baird.
Yes.
Motion carried, 3-0. Item 7, WH 20-3, resolution to approve amendment number 1 to the Canopy Park Project Redevelopment Agreement between the City of Lincoln, Nebraska, West Haymarket Joint Public Agency, Canopy Park LLC, and West Haymarket Holding Company for the redevelopment of property generally located at the northwest corner of South Canopy Street and N Street, including the sale of real estate from West Haymarket JPA to West Haymarket Holding Company in the amount of $1,836,466.
Chris Connolly, City Law. This is an amendment of the agreement that the board approved back in May of this year. Since that time, there's really, the biggest change as far as the JPA is concerned is a change in the players at the table. Essentially Canopy Park LLC is going to take over this entire project. The Lincoln Haymarket Development Corporation, which was going to get involved on the affordable housing component, was unable to stay in the project, and so they had to back out, and Canopy Park is going to take over that same component. And so really all of the changes that are substantial in nature really apply on the city side, as was taken up before the City Council on Monday. And so really, as far as the JPA is concerned, what the JPA is going to receive in proceeds for the sale of the land is still the same. We're still going to sell the land to the city for the parking garage. And so all those other components and parts of the agreement as agreed to really in May really remain the same. Now, there are a couple of representatives from Canopy Park here, and so I don't know if they want to come up and say anything, but they're certainly welcome to do that. Other than that, I really don't have a lot else to explain with regard to the redevelopment agreement itself.
Any questions, Mr.
I think
Connolly?
the big key to this is that one of the parties was not able to perform, and the other two parties stepped up and are going to be able to provide affordable housing to the city. And I think that's a real, that's a great thing for our community and a great thing for Lincoln.
Yeah, if I may.
Please.
Madam Chair, I just would add to Regent Claire's statement and thank the people, the partners that did step up. It is key as we move forward as a city in affordable housing, and I certainly appreciate all the efforts coming in late to the game as a new council member, but I know it was a lot of work on their part and certainly on the part of the law department and a lot of other people, so thanks for all those efforts.
And I will echo that we know that housing is critical for growing our community, both market rate and affordable units, and this project, which has taken some collaborative work and evolution and adaptability by the partners, is going to help us achieve that goal, and we're grateful for the collaborative work with our Urban Development Department and our City Law team as we've worked through the evolution. So looking forward to seeing this getting built. All right. Would anyone else like to speak to this item? Oh, wait, where are we?
You asking for public comment?
Yes, go ahead.
Jane Kinsey with Watchdogs. I will repeat what I said at the city council meeting. This is a feel-good resolution that has a lot of caveats for the taxpayers and for the people of Lincoln who want to live down there. One of them is that the JPA has put surcharges on tenants renting in the Haymarket on their electric bills. And unless the JPA wishes to waive that energy surcharge from the District Energy Corporation, they will have a higher electric bill. The use of TIF for facade enhancements is not the intent of the original TIF. It was for infrastructure only. So we're not in favor of that. There are PCB pollutants in the soil, and even though there is a remediation plan for that, which has been approved by the Nebraska Department of Energy and Environment, no one can assure that some human damage might not be done over a period of time for people who live there for many years. I think the people can go to the CDC and find out about how they view PCBs. The U.S. Geological Survey has stated that a diesel plume, which is discovered under the soil, is extremely difficult to get rid of, and even though it may appear to be gone, it moves around and it can still be hiding and pop up later. We think that this has put the taxpayers in the future in jeopardy from all of these situations, and it's not good. If you want low-income housing, if you want to do something like this, we suggest that there's a lot of other land down in the Haymarket that is free from these kind of caveats, and that the city would be wiser to look at. It's a good idea, but it's just in the wrong place. And we would hope that even though it's gone this far, you could talk people into doing something different. Canopy Park could, has ideas, they want development, they can look at something else that's safer and freer from problems for everybody.
Would anyone else like to speak to this item? Seeing none, I'd entertain a motion on the resolution.
So moved.
Oh, would you like to speak, Mr. Marvin? Sorry.
Excuse me.
That's right.
My apologies. Dan Marvin, Urban Development. You are in the Canopy Park. We did present to City Council earlier this week. They're going to be voting on that 2 weeks from Monday. This is a project that is just an amendment. It's 252 units, 41 affordable housing units, modifications in the TIF, and the amount of the increase in the TIF, some of it will flow over into Block 5, which is the park across the street, and some of it will be retained onto the Block 4 to do street improvements, not street improvements, but other improvements around the area. And we're very supportive of the project, and we think that's going to be a great benefit. Some of the issues that I think are relevant to the West Haymarket Joint Public Agency is this project ties into district energy, which will then lower some of the operating costs of district energy by spreading the costs. As the number of square feet grow by that, the ongoing cost for district energy gets spread to more users and lowers the overall cost. And then, of course, there's the land sale money that goes back to WHJPA, total of about $1.8 million.
Okay, thank you. Any questions for Mr. Marvin?
Thank you,
Okay.
Dan.
Okay.
Thank you. All right. Could I get that motion one more time?
Yes. Yes, so moved on item number.
All right, moved by Councilwoman Ward, seconded by Regent Claire. Any further discussion? You weren't here when we said some thank yous, Mr. Marvin. We appreciate the work that you all did to collaborate and adapt to the changing nature of this project that led to this amendment, and appreciate your hard work. Please call the roll.
Ward,
Yes.
Claire,
Yes.
Gaylor Baird.
Yes.
Motion carries 3-0. Item 8, WH 20-4, resolution to approve customer energy service agreement between the West Haymarket JPA and Canopy Park LLC.
Chris Connolly, City Law Department. This is the next step in the Block 4 process. With the change in players for the redevelopment agreement, we needed to kind of change the energy service agreement that was approved last July by this board. Although Canopy Park was really the named customer in that agreement, there were a number of references in there to the WHTC, enough that I felt like it was prudent to go ahead and just do a new contract. The terms are all the same. We are lowering the number of square feet that are conditioned, and that'll have an impact eventually on the rate as it gets calculated when it actually comes online. But other than that, this is really the same agreement that was applied, that was approved back in July by the board. And so we would just ask the court, excuse me. Ask the board to go ahead and approve this. That's what happens.
Your Honor.
Happens with you're an attorney. Anyway, we would ask the board to go ahead and approve the agreement. Yeah, exactly.
All right, any
I like it.
Thank you, Your Honor.
It's a big step.
All right, thank you.
Questions?
Okay, I've got nothing.
All right. We'll take public comment.
Jane Kinsey with Watchdogs. So what about the JPA surcharge? Is that included in here? Or are you leaving that up to the Canopy Park to make that decision about whether they're going to charge that?
What surcharge are you referring to?
Okay, tenants who are down in, get their electricity downtown, have a surcharge on their electric bill that says JPA surcharge. So is that going to continue for these tenants or for Canopy Park tenants, or how is that going to be?
I'm not familiar with a JPA surcharge, and so that would be an LES question, because that's not something that the JPA is charging.
What's labeled that
Okay, well,
on their
there's-
bills?
I can't tell you what that means, and since it's coming from LES, for their electric bills, right?
It's labeled by their by their landlord as a JPA charge.
I don't know what that is. We're not charging that.
You aren't. Okay. So, but you're not familiar with this at all?
Not a JPA surcharge on LES bills, no.
Okay.
Obviously,
On the tenants that are down in the Haymarket that are getting energy from the DEC have on their electric bill a marking or a notice of a JPA surcharge.
Okay, and like I said, I don't know what that is, because that's not a bill that's coming from the JPA.
Okay. So who's putting it on there then?
Is this a bill coming from LES?
Actually, the way that the tenants are seeing it, it comes from the JPA.
Well, I don't know what they're seeing. If you're talking about in the West Haymarket area, for the tenants that are living down there, they
Right.
are getting a charge. It's not a surcharge, but there is a charge for the energy that the JPA is supplying them. And
Okay.
that's their regular utility bill.
Okay, so it's extra beyond their,
No, because we are passing through the cost of the energy. JPA is making no money off of the DEC energy. Every cost there is that comes out of that plant is passed through, and the JPA is not putting any additional charge on top of that cost.
okay, so why is it labeled JPA then?
We aren't generating a bill, so I can't tell you what they're putting on the bills.
Okay.
That's up to the landlord.
Okay, so the landlord doesn't want to say that they're adding that on and they're putting it on the JPA?
I'm not speaking for the landlords. I don't know what they're saying.
Yeah. I've been presented with bills by these people, and they want to know why JPA is adding a surcharge on their form.
They
And,
need
you
to-
know, surcharge may be just the wrong word to use, but it's an additional on the regular electric bill that they have.
Well,
1
the
minute.
the utility charge, the DEC cost would be in addition to their electric bill.
Okay,
That's because it's separate. Your heating and cooling is separate from your electric bill.
okay. So actually, it ought to be labeled DEC charge
Maybe,
rather than JPA.
maybe. Again, we don't generate that bill, so I don't know what they're putting on there or whether it's appropriate. What we do, what the JPA does is send a bill to the landlord and says, this is what you owe us for that building.
Okay.
And so they pay us for all the units. We don't send out bills to each individual tenant. We just send them out to the building owners.
Okay, so the JPA bills in addition to the electric company bill.
Right, JPA is not LES.
Okay, so this would be like using the DEC, would you say that?
5 minutes.
When you say use the DEC, there is an electrical component built into the DEC rate, but that's all part of running the pumps and the chillers and the boilers and all that. But it's not the electric bill. They get a separate electric bill. And how the landlords are displaying that to the tenants, I don't know.
Okay, okay, but the JPA has a charge.
The only charge, though, is what it's costing us to pay the DEC for that energy.
Okay,
Thank you. Thank you
Okay.
both. And if you'd like to bring in a copy of one of these bills to get questions clarified, we could certainly try and assist you and have something to look at, but thank you.
well, I guess my concern is this low-income people having an additional charge on their electric bill.
Yeah, why don't you come up?
In regards to the Block 4 development, what we've structured is for the affordable housing units, the rent that they pay is inclusive of district energy. So there is no charge other than their rent is not going to have an additional bill on top of it.
For electricity.
No, for the district energy. So
Okay.
district energy and rent are inclusive together.
Okay. And so they wouldn't, it would be one bill total? One bill total?
They will, it is inclusive. Are there going to be two lines on there? I don't know. My suspicion is it's just going to be rent would be inclusive of district energy. And there will not be a tack on surcharge, extra charge related to that. That all meets within the, in order for them to qualify as the affordable housing, their rent and utilities, which is the district energy component of this, needs to meet the 30% of a 60% area median income. So 60% If you're making 60% of area median income, rent burden or cost share burden is if you exceed 30%, and the rents will be below that 30% level. That's what we've discussed, and that's the way the billing is. So the allocation between rent and district energy aren't relevant because there'll be a cap at how high this can go.
Okay, so it'd be a cap.
Yes.
Okay.
All right, would anyone else like to speak to this item? All right, seeing none, I'd entertain a motion on
So moved.
Second.
LH 20-5. I believe that is where we are.
Yes.
All right, moved by Regent Clare, seconded by Councilwoman Ward. Any further discussion? All right, please call the roll.
Ward,
Yes.
Claire,
Yes.
Gaylor Baird,
Yes. And I may have said it right. Is it 20-4 that we just voted on, Casey, just for the
Yes.
record? Yeah, 20-4. My apologies.
Okay, so item number 9, WH 20-5, resolution to approve agreement to terminate customer energy service agreement between the West Haymarket JPA and Canopy Park Condominium Association.
Chris Connolly, City Law Department. Simple purpose of this is to make a clean record that we are terminating the agreement that was approved in July of 2019. And so we just take that one out, and now you've already approved the other one, so now we won't have two agreements. They won't get double billed.
Thank you. Any questions for Mr. Connolly? All right. Would anyone like to speak to this item? We'll take any public comment. All right, seeing none, I'd entertain a motion on WH 20-5.
So moved.
Second.
Moved by Councilwoman Ward, second by Regent Clare. Any further discussion? Please call the roll.
Ward,
Yes.
Claire,
Yes.
Gaylor Baird,
Yes.
motion carried 3-0. Item 10, WH 20-6, resolution to approve an agreement between the West Haymarket JPA and Carbon House for website design, development, hosting, and support services for the Pinnacle Bank Arena for a term of February 3rd, 2020 through February 2nd, 2023,
You want to do it?
upon the terms and conditions as set forth in the agreement.
Bob Wallace, City County Purchasing Agent. So this is a new contract. It is been being done as a sole source this time. We did a RFP 4 years ago and hired Carbon House to do the website design for Pinnacle Bank Arena. And following the end of the contract term, it was requested that this company remain in place because of the excellent job that they're doing, but also consistency and continuity and working with the public through their ticketing and everything else that the program offers. And so we put in for this 3-year contract. And if you have specific questions in regards to what this website company offers that others don't, Lynn with the JPA or with the Pinnacle Bank Arena is here to answer those questions.
Okay. Thank you. Any questions for Mr. Walla? No? All right.
Thanks.
Thanks. Would anyone else like to speak to this item? We'll take public comment.
Jane Kinsey with Watchdogs. So was this bid out?
So it was originally done as an RFP 4 years ago.
Not rebid?
Correct.
And why was that?
The main reason was because of the consistency that the public sees in the ticketing and the way that the website is used for different events throughout the year.
Uh-huh. The convenience of the arena and the convenience of its customers,
Correct.
but not for the taxpayers.
Actually, the rates that they offered to us remain the same as what we had in the original contract. And we also negotiated a lower increase per year than what was in the previous contract.
Okay, so the list of the prices here are lower than they were before?
The $650 per month, I think, is the same as what it was in the previous contract. Is that right, Lynn? Yes.
Okay,
And so that remains the same now for the next 3 years. And rather than a 5% increase per year, it's now 5% after 3 years for the renewal period.
okay. And, but there were no bids to see if maybe another company could be cheaper at this point?
The arena staff contacted other arenas that have different web designers, and I believe SMG even has some preferred website providers, and that this contract with the services that are provided in here were at a better rate and a better service than what they could find.
Okay. But not through purchasing?
It was through me in coordinating with me and Tom Lorenz together in coming up with this contract.
Okay. And you're with?
I'm the purchasing agent.
Oh, okay. But no bids,
Correct.
just ad hoc?
Correct.
Okay, thank you.
Thank you. Would anyone else like to speak to this item? Seeing no one coming forward, I'd entertain a motion.
Yeah, well, I got a question.
Oh, you got a question.
Chris,
Sorry.
Do they have a legal obligation to go get bids?
Well, there's always an obligation to do a competitive process. I understand this was sole sourced at one point, and so that's usually an indication that there's a lack of a competitive market out there to do that. Also, this is a subscription agreement, which is a little bit different because it's only on an as-needed basis, so it's not like there's a steady flow of money coming out from the JPA on a regular basis. It's only as needed. So, so yes, there is a need for a competitive process, but it doesn't always have to be bidding.
So you're satisfied with the way that they went about going through determining this contract?
Yes.
Okay. And it doesn't violate any rules or anything?
No, I'm not concerned
Okay.
about it. We're in compliance with the County Purchasing Act.
Okay. Thank you. Right. Could I get a motion on?
So moved.
Second. Moved by Regent Clare, seconded by Councilwoman Ward. No further discussion? Please call the roll.
Ward,
Yes.
Claire,
Yes.
Gaylor Baird.
Yes.
Motion carried 3-0. Item 11, WH 20-7, resolution to accept the financial audit and management letter and report from BKD, CPAs, and advisors for the period ending August 31st, 2019.
I'm just going to introduce Chris Linder. Chris Linder is our auditor from BKD. BKD was hired through a competitive purchasing process in 2015. That contract came before the city council, was approved then. There was also an option to extend within that original, so that has been extended by 4 years. The city council just approved that this past year. So BKD is going to be our auditors for the next 4 years. How audits work, management prepares the numbers, and then auditors come in and check those. So I'm going to turn this over to Chris to tell you the results of that financial report. So.
Okay. Thank you, Brandon. Good afternoon, board members. Again, Chris Linner with BKD CPAs here in Lincoln, Nebraska. Appreciate the opportunity to present the fiscal 2019 audit results for the JPA to you again this year, and want to just not only thank the board for allowing us to work with the JPA again this year, but also the members of the city finance staff that help us throughout that entire process. It really is an iterative process from doing some of the planning work starting in the summer through kind of the field work and legwork, and a lot of the folks here get pretty sick of seeing us over the weeks that we spend. So to the team there, and as I'll kind of report here is throughout my results, positive results from just the process itself, and knowing there really are no issues or findings and deficiencies that I would need to report. So obviously a kudos to the team here at the city for having things in order for us, and willing to lend a hand when we're out here doing our testing. So the two documents that I have in front of me are two that were in your packet as well. So the first is whether yours is bound or maybe you received electronically, is the audit report itself. It just has the entities and the JPA's name at the top, and then the other one's a shorter letter that has our logo at the top. And so that's really the communication letter. So under the audit standards, there are certain communications that the auditor has for governance, for the board in this case. And really I'll cover most of those as I'm covering items in the financials and maybe a few other matters. So as we go, if there's questions, please let me know and I'll try to get through things. The first thing I'll mention, within the audit report, the financial statement document, there's actually two opinions. And so that first opinion is the financial statement opinion. And that's, really what you think of from an audit standpoint is us coming in, doing the testing of the numbers, and then placing an opinion saying, are those in accordance with GAAP? And so our opinion was an unmodified or a clean opinion, noting that we didn't take issue or exception to any of the financial statement amounts. And then the second is the opinion that's placed near the back, and that's because of the structure of the JPA, similar to the city. It's an opinion in accordance with government auditing standards. And so really that's looking and saying the financial statement audit's done in accordance with that basis, but then looking at internal control. And if we had any significant control deficiencies, so if we had material misstatements of the financials, if we tested the segregation of duties and had issues where there was one person that had control or access over an entire area, where that was a control problem, we would have to report that within that opinion. So if you'll see, that opinion does not have any instances or reportable items like that, so that is kind of considered a clean opinion as well, so we don't have any control issues noted in that back opinion. Looking at, and I won't go through the entire document in detail, maybe touch on a few things high level. On page 3 of the financial statement, or the audit report, is the management's discussion and analysis. And that's where, if you haven't had a chance to get through the audit report and the document itself yet, is really maybe a shorter, high-level summary of the financial statements, and talks about, what were some of the changes from fiscal 18 to fiscal 19, so you see why balances maybe went up or down significantly. And then also looks and says, what are some things that the JPA is looking in the near future that could have an impact on the financials. And that section completely written by management, part of the audit packet, but really is something that's a little more of a layman's read. So it's doesn't have the accountanese sometimes that the normal financials and footnotes will have. So if you only have a few minutes to get through the document, that's maybe a better section to spend a little bit of time with. Moving through the financial statements themselves, probably just going to touch on the balance sheet and the statement of net position on page 7. And the unique reporting for the JPA is because of its, the structure of the JPA and then it being a component unit eventually of the city of Lincoln, you really have two presentations within this one statement. So you see there you have the JPA fund column, which is looking at that more of a current focus. And then you go to the very right is the statement of net position is looking at everything on a full accrual. And that's where, similar to what the city of Lincoln would report, with a little different presentation is you have a lot of the funds, so for the city of Lincoln, you'd have the general fund reported on that current focus, where then when you bring everything, the government-wide level, everything's on the full accrual. So you have to do that similar here, so you have the two different columns. So you'll notice in that fund column, everything's more of a short, kind of the current focus, you have really cash investments, short-term receivables, and then that's offset by maybe more of your current or short-term liabilities to kind of say, what's our equity or fund balance of looking at things from a current focus. Do we have the assets and resources available to meet our current obligations? Where if you move to the right, you begin to add in those long-term assets, the structure itself, you also add in the bonds. So everything on the full accrual, all assets and liabilities are encompassed in that column. So just important to note when you're looking at that, what that means, what that represents, and it being a little bit of a unique presentation because of its structure under the relationship between the university and the city of Lincoln. The next page then is really kind of the income statement for the JPA. So looking at and saying those assets and liabilities change from year to year, what was that activity? And so similar presentation there where you have the different columns and the adjustment column in between. So really looking and saying, well, you go from a short-term to long-term focus, a lot of that's those non-current, the long-term assets. And so the big bulk of that difference is the depreciation expense that you'd have on those that you don't have under the current presentation. Following then, after that is just several pages of footnotes, which provide some of the documentation and background of the financial statement amounts. A few just that maybe note, and we have these listed in that communication letter I mentioned as well. Page 18 within footnote 5 has a summary of the long-term liabilities. And so looking in what debt still outstanding for the JPA, what are the repayment terms of that debt as well, so that the reader understands what years certain obligations are going to come due. Contractual arrangements, so what certain things are fixed and have future payment terms or future receipt terms. That's on page 21. Related party transactions. On page 23, I believe, footnote 9, obviously with the relationship between the university and the city, there are some payments back and forth for various items that get disclosed in the report. So again, the reader, the public would have information of what those items are, what the background is, and maybe what some changes are from year to year included in that footnote. And then the last page of the footnotes, the subsequent events, was really just a brief summary of the refunding that took place this last fall of those 2011 bonds that Brandon mentioned when he was up here with the claims earlier. So really that's it from the financial report, the audit report, the financial statements and footnotes. If there was any questions on that, I'll take that here in a second. But really from an accounting standard standpoint, there were several accounting standards effective for a variety of entities. However, with the JPA's activities, really none of those had an impact on these financials. So nothing from new line items, new disclosures, nothing that's really new from last year there. If you look at the communication letter then itself, so maybe some of the other items in there, there was one adjustment we proposed as part of our audit process for capital assets. So just proposing that correction, and management was open to that and posted that. So again, thanking them for if we have a proposed correction, they agree to that and make that in the financial statements. And then the other thing, as I noted kind of earlier in my presentation, as part of our process, and really a lot of this is early on in that process. We're coming in, we're making a lot of inquiries of management and others, and we're testing those internal controls and saying, are the segregation of duties that need to be in place, are they there? And then are the checks and balances, the reviews and reconciliations that are supposed to be happening, are they getting done, and are they getting done timely as well? So if reconciliation should be done weekly or monthly, are they getting done weekly and monthly, or are they taking longer? So if we had any issues with that, or if things weren't getting done from that standpoint, we'd have that reported in here as a control deficiency, noting that you'll see there are none of those items in there. We did not identify anything that rose to the level of a control deficiency or a reportable finding that would need to be reported to you in the management letter. So again, kudos to the team here at City Finance for having those things in order and having things ready for us, and we appreciate all the help they provide to us. So with that, I will open it up to any questions the board may have.
Questions?
From a process standpoint, then, what you're saying is that we have the right checks and balances to ensure that there's no fraud being conducted or any issues like that could potentially happen against with the monies?
Correct. Really, it's looking in and saying, are there controls in place to prevent a material misstatement, whether that be fraud or error? And so we did not identify anything that we felt was a risk of misstatement or a control issue that would cause that. So correct.
And then from a financial standpoint, you looked at the position that we're in financially, particularly with the refinancing of some bonds and the balances in the accounts that were referenced earlier. You feel like we're in good position to be able to make those principal payments when those come due?
And that's really more of a decision for management. Our objective and role is to look at the financials for the fiscal year and say, are the balances presented to us by management, are those balances accurate, one, and then are they in accordance with the accounting standards? So we actually do not opine to say, our current resources adequate to make those, or current and then projected resources. We're not able to do that, Tim. So.
You thanked the team, so but I'll just ask, you felt that there was you received the information in a timely and transparent manner, that staff did provide you with open access to documents you needed. There was nothing about the process that gave you any pause?
No, absolutely. Everyone at City Finance we worked with for a number of years, and having the things ready for us when we come in, and then being able, being accessible during the audit process as well. No issues from that standpoint, or any disagreements or issues there. So yes.
Thank you. All right. Would anyone else like to come up and speak on these items? Thank you very much, Mr. Linder, for your services.
Jane Kinsey with Watchdogs. What percentage of your BKD's business is with government?
Overall, if BKD as a whole, so we're a national firm, from a size-wise, the 12th largest firm in the United States. Here in Lincoln, we have about 65 professionals in our Lincoln office. And our mix of services is about 50-50 audit tax. And so with that, if you take that 50% of audit services and then looking and say, okay, what percentage of audit maybe government's probably in that 20% range of our total audit services. And so with that, I lead our public sector, our government team. So the team that I work with is solely working with public sector and governmental clients.
Okay, so you'd say 20% of the total then?
For the audit services, yes, roughly.
Okay. And I think BKD had a contract for years with the city, is that right?
That is correct. We still perform audit services for the city of Lincoln as well.
Okay, and that was renewed for 5 or 6 years, I think, just recently.
Similar, the city of Lincoln audit contract and the JPA contract are kind of concurrent because of the relationship of the financials of the JPA being completed by the city finance. It really is all put as kind of one there. So as Brennan mentioned, that RFP was part of the 2015 process, and then it was for a 4-year term and a 4-year extension that was just renewed for fiscal 19 and for the next 19, 20, 21, and 23.
Okay. And do you find anything different, or is it pretty rote year after year?
In terms of processes, again, everything that we've, there's always going to be changes that happen, and because of changes in accounting standards and changes in audit standards, what we're required to look at and test is always going to change, and so that's going to require some change here at City Finance as well. And from a control and checks and balance standpoint, maybe our early years working with the city, we had some suggestions to tighten those controls. At the time, management accepted those suggestions and made those. And since that point, we haven't had any issues or findings or any reason to have some of those change. So from that standpoint, we have not run into any big changes that would need to be reported.
Mm-hmm. Okay. Are there any government laws that have changed about government auditing or rules of that kind of thing?
Nothing of significance in the past few years, no.
Okay. Well, Watchdogs has had issues about some auditing in the past and how things are explained and so forth. So we think we need to have an outside look at what's going on. So we're preparing to ask the state auditor's office to do some checking of the program. And I think, if it comes out fine, that's fine. If not, then we have other eyes looking at what's going on so that we can feel comfortable and perhaps you feel more comfortable also.
1 minute.
Thank you. Thank you. Would anyone else like to speak to this item? I guess I would just like to get a clarification about the independent nature of our audits. If Mr. Kaufman, if you could come up.
Yeah, and so we're always going to pay somebody to come in and audit us because it's a requirement of state law. However, there's independence requirements that are placed on auditors, and I'll probably have Chris speak to that a little bit. He can speak to independence and how they keep that separated from our relationship with the city and hiring them as independent auditors. So.
Absolutely. Under the audit standards, there's very strict independence rules, and once those are broken, that you lose the public's trust, and that would really be the detriment to any firm. So we watch that very carefully. There's independence by fact and appearance, and so if there ever was independence issue by appearance, that would also be something we'd be concerned about. So we're very cognizant of those independence rules and making sure that we're following that and working with the city. One thing that I didn't mention as part of my presentation, in addition to the review that I do and the team that we have here out in the field, we have another partner in our firm that then is really separate from the overall team here, and not in our Lincoln office as well, that looks at everything that we've done from a documentation standpoint and from a deliverable standpoint, so the report and the management letter, to make sure that we're not trying to sweep something under the rug because of our relationship, and to make sure that we're crossing our T's and dotting our I's. So kind of a second set of eyes on what we've done, so we kind of consider that our objective or independent review of our work as well. So with that, independence is definitely something that's key for us.
Any other questions for
Yeah,
the team?
I think that there's a reason why you're a national, and I thought you were international, actually. I thought you had offices outside the
Currently, we
country.
do not, no.
Okay. Anyway, there's a reason why you're national, and that's because you're an outstanding firm. And I appreciate the ethics and the integrity that you bring to our board in making sure that we're doing things right.
Thank you, Tim.
Okay, thank you both.
Thank you.
All right, would anyone else like to speak on this item? Seeing none, entertain a motion.
So moved.
Second.
Moved by Councilwoman Ward, second by Regent Clare. Any further discussion? All right, please call the roll on WH 20-7.
Ward,
Yes.
Claire,
Yes.
Gaylor Baird.
Yes.
Motion carried 3-0.
Okay. And the last item on our, second to last item on our agenda is just announcing the next meeting date. It will be Thursday, February 27th at 2:30 here in the council chambers, first floor of the City County Building. And with that, I entertain a motion to adjourn.
So moved.
Second.
Moved by Regent Clare, second by Councilman Ward. Please call the roll.
Ward,
Yes.
Claire,
Yes.
Gaylor Baird.
Yes. Okay. We are adjourned.